Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
So today we're going to talk about a couple news articles, and they relate to investors being restricted from purchasing homes in either a whole country like Canada, okay, or in subdivisions. Okay, so the first article, we're going to throw these two articles up and then talk about them. So the first one is the one from Canada. Canada is basically looking to limit investors from making any purchases in the country, subject to some exemptions, which probably have a lot of loopholes and don't really mean anything. Of course, in Canada, they have, home prices have increased rapidly, and people that live there are saying, hey, we can't buy houses because these investors are buying them, right?
Right.
Okay. Now we have this article from the Wall Street Journal. Homeowner groups seek to stop investors from buying houses to rent. Okay. Now, so what we're gonna do is we're sort of gonna have a discussion about this. So Juana, is this a common thing? Meaning, is this even legal? Like, can an HOA say we're not going to rent to investors? We'll talk about the legality of it.
So the short story is yes, HOAs have these really broad powers.
Yep.
They can limit almost anything. They can limit the color of your house. They can limit how you use your house. They can limit whether you can rent out your house short-term, long-term. They can limit the kind of landscaping you have. They can limit all kinds of uses of your property. So yes, HOAs have very broad powers.
Okay. Historically, there's two big reasons that homeowners associations limit investors. One is condo complexes, because once a condo complex exceeds half of the condos in a complex being owned by investors, the FHA loans no longer, you can't get FHA loans. So it limits owner-occupants who would buy and get an FHA loan.
Right. But that does not apply to single-family homes in a subdivision.
Right, but we're talking about condos. That's
right.
one reason. So one reason is to preserve
financing,
a
yes.
bigger buyer pool, right? Because
right.
you would effectively cut out people who need to get loans.
Right.
The other argument has always been, well, we don't want a bunch of renters bringing down home prices. Okay, we'll talk about that a little bit. So what does that look like? Like, what do people mean when they say that? What are they worried about?
Okay, so I am not a fan of being politically correct. So if you've been on this channel for any length of time, you know that. However, this completely offends my sensibilities, because what they're talking about is the stigma of renters.
Okay.
They're talking about, we don't want those people. Whoever those people are, whether it has to do with an economic group or with a cultural group or whatever. But, my position is this is about your ability to afford to purchase a property or rent in an area. It should have nothing to do with any sorts of social stigma or anything like that. Something like that completely offends me. And yes, I mean, this has also been associated with redlining and racial discrimination and all of this, and I'm not really into that so much. But like I said, anytime that you are considerably infringing upon somebody's use of their private property, and particularly when you're doing it to exclude a group of people, that I find offensive.
Okay, now what's happened though in we'll just say the last decade? Homeowners associations, municipalities have sought to seek restrictions from people buying and making short-term rentals. Okay, and there's this other stigma that these are partiers, that they don't want to let short-term rentals in their neighborhoods because they're just there to throw parties. That's the only reason you would want a short-term rental, and it has nothing to do with you're just in town for 2 months on a project, you need a place for 2 months. You just they're just going to throw a party, so we don't want them in our neighborhood. And
so,
this is a big thing, I would say, that's going on in a lot of cities, San Diego and San Francisco.
And Las Vegas too, yes.
Yeah, Las Vegas, super
So
strict.
again, I think it's less about that and more about two things. One, protecting a hotel industry, so that's clearly the case in Las Vegas. And two, it is going back to the point I just previously made, that maybe these are people who would not normally be able to afford to live in that neighborhood. And so that is a way to exclude people. And again, that offends me. I'm sorry if that's not the way you feel, but that's the way I feel.
People are very conscious of their social status.
Yes.
They seek to live in neighborhoods that they believe represents their social status, and they believe that if you don't own a home and you're just renting in there, you're borrowing social status. You're basically usurping what they've earned by buying a house.
Yes.
And they don't, they don't want people who don't, actually socially should be in their social circle. Look, if they can't afford to buy a house, they shouldn't live here. Right.
Look, we have stayed in short-term rentals, in very nice short-term rentals, very expensive short-term rentals above our social status. And so, somebody could make the case that we didn't belong there too. And, while I really don't care what people think, I do care about excluding people. Look, this is like saying that somebody who saves up their money for a once-in-a-lifetime vacation shouldn't be allowed to do it because it's beyond their social status, or they shouldn't be allowed to go to a super expensive 5-star Michelin star restaurant because it's above their social status. That is completely anti-American. I mean, I hate to say it that way, but it is. This is not what this country's about. We are about equal opportunity. We are about giving people a chance. We are about letting people reach. And and if it means that you save your money and you get to go to a short-term rental that's a multi-million-dollar home for the weekend and it costs you an arm and a leg, but my goodness, it's the fantasy you've always had and you get to do this, then good for you.
Okay, so I want to talk about the economic impact, and I also want to talk about the unintended consequences, because they're making assumptions that there's a distressed class of people and that they're going to protect them by limiting investors. Okay, so let's start with this. Let's start with marketplaces. Now, a marketplace is a place where buyers and sellers meet to exchange a good or service. Are there any marketplaces you can think of that are more efficient if you take a class of people and remove them? Like, does a marketplace get more efficient if you take people out?
No, it doesn't. So, the other thing that I think in doing this is harming individual buyers and sellers. So what I mean by that is twofold. One, it's harming individual sellers because now it's limiting the buyer pool for them. Okay. So they have less of an opportunity to sell their home on the open market, because they're no longer selling their home on the open market. They're selling their home on a restricted market. So they're possibly getting less for their home. Maybe their home is even taking longer to sell and they're incurring other costs. So that's the first part. The second part is, what about the people who are buying that starter home? And so they're thinking, well, I'm going to buy the starter home and 5 years down the road, I'm going to go ahead and turn this home into a rental and I'm going to go buy my move-up home and that sort of thing. So this is a way for them to enter the investment market, right? But by homeowner associations interfering with that, they're actually hurting the individuals. I understand these homeowner associations are trying to help, but in trying to help, they're actually hindering the people that they're trying to help.
If you're a seller and you're trying to get as much money as you can, you want every single person possible to be able to purchase, whether it's an investor or whether it's a owner-occupant. And it doesn't really matter, when you close escrow and you get your check, you shouldn't care if it was BlackRock or Open Door or some, mom and pop just, buying their first investment property because they want to rent out the property. If you're in a neighborhood where it's just under the median home price for your area, that like the 25 to 50 percentile, that's the sweet spot for rentals usually. It's the best price point to enter where you get a lot of rent. And in most markets, maybe not the Bay Area, but like in Las Vegas and most markets, that's where you want to be. And if you happen to live in that neighborhood and now you're trying to move into a different neighborhood, let's say that the neighborhood you're moving out of has a rental restriction. They're tired of the renters buying in the neighborhood. And then the neighborhood you're going to doesn't have that restriction. Now, where you're trying to buy it's very competitive, right? And then where you're trying to sell in your own neighborhood is now more difficult. And if you're moving markets, if you're moving from a market, like there may be a city or a jurisdiction that's made these rules, they're actually making it harder for you, the person, because they believe this all stems from people complaining, I can't go buy a house because of BlackRock and all these institutional investors and all these greedy investors with cash. They have an unfair advantage because they have cash. And the truth is, a lot of owner-occupants have cash, and they're going to buy the house cash. So, and they're investors who get loans.
Right.
So it's not necessarily, most investors have cash probably, and a lot of owner-occupants get loans, but still you can't just, when you imbalance the market trying to protect, you have unintended consequences that end up hurting other people. So, and just like Wanda said, if this is your first, if you're buying the starter home that you don't want to, you're starting a family, you buy a 2-bedroom because that you can afford it, but you want to start building equity, but you find out you can't rent it ever. And then you're like, well, so what do I do when I have to sell it? I guess I have to sell it and then take the equity and pay taxes or what it may potentially on it, and then try to move that equity to another house. And it cuts you out of building. Now maybe you want to buy that to build wealth.
Right.
So maybe you put off the decision. Let's wait until we can get the house we want, and you wait 2 years to accumulate some more money, have your income rise, and then prices go up, and you're chasing the market.
Right. The other argument that's being made is that somehow investors don't take care of properties as well as owner-occupants. And I have 2 things to say about that. One, institutional investors do take great care of the property because they have the funds to do so. So these are properties that are generally well cared for, and they are updated and upgraded more frequently than those properties usually owned by individuals, because again, they have the money to do it, and they are providing a decent place for renters to live. So they are actually providing a good social function. As far as individual investors, maybe they don't always have the money to improve the property as much as they would like, because they are they're subject to the whims of the market. They're subject to repairs, tenants vacating the property and having the property lay vacant without rent revenue and that sort of thing. So there are things in there, but these investors are trying to do the best that they can. Because remember, this is an investment. They're trying to be good stewards of their money. It is not their intention to have the property not be kept up, to have the property dilapidated, because it is an investment. What do we do with our investments? We take good care of them because we want these investments to appreciate, so that at some point we can do something else with the funds. So the argument that investors somehow don't make good neighbors is really built on a false premise. Now, are there investors who don't take good care of the properties? Yes. Are there homeowners who don't take good care of the properties? Absolutely. So it all depends on a case-by-case basis. So to generalize that, it really is, it's a false premise.
Yeah. There's another unintended consequence I want to talk about. Let's just say a metropolitan area bans it. They say we don't want it anymore. The existing rentals can be rentals. We're going to put all these restrictions. And it's very possible that you could disincentive new home builders, because new home builders don't all just sell to owner occupants.
That's right.
And there may be a limit to, if you start limiting who can buy and prices stop going up or start going up less, home builders may say, this market's not as rich as us, let's move down the road 30 minutes and buy this and build in this other market. And then you actually, it's the rent effect, or when you have rental restrictions, it's that effect where you disincentivize the construction of new housing potentially. So I get that there's, it's like, what's the path to hell is paved with good intentions. Is that the
yes?
Is that the
yes.
saying? That's what this is, because when markets work well, the real estate market is doing exactly what it's supposed to do. It's reacting to all these different inputs that it has. Low, if no foreclosures. Very, very few home building, and we've underbuilt the last decade probably by 5 million homes nationwide. We have wages rising, we have inflation rising. Mortgage, although they're rising, are still relatively low. You have a ton of people now with a ton of wealth because the savings rate is higher than it's ever been. You have tech stocks overbought, you have crypto that's probably overbought or maybe worthless or potentially not a very good investment. And money is flooding into real estate. The market is just doing what it's supposed to do. And as money floods into real estate, prices go up. So now anytime someone tries to put their finger on the scale, it's not like a seesaw where it cleanly moves the other way, because the market then adjusts to do this. And it doesn't, it's extremely difficult for HOAs or for municipalities to try to nail this. And okay, so here's an example. Let's say that this is a subdivision where the homes are $300,000, and they're going to go up by 10% that year, so $330,000. So they want to try to limit, they want to try to move the scale, and they ban investors. So anything could happen from home prices could stay at $300,000, they could go up to $305,000, or they could drop a little to $295,000, right? Because now there's less people buying in there, so maybe there's 5 houses on the market, but there's only a couple people buying in there, so maybe they get competitive and start dropping prices, right? And then they actually cause prices to go down. Now somebody in the neighborhood wants to get a home equity loan, and they can't do it. Or they go, well, your neighbor just sold for $290,000, so you can't. And they're like, I'm going to sell next year. I can't believe you only got $290,000 because you just took out investors of the market. Okay, now, and then let me ask you this question: how much more affordable is that house at $290,000 versus $300,000? Or if it had just been allowed to go to $330,000, is it that is all of a sudden, oh my gosh, I can't afford it anymore? It's so I don't know that they solve a problem, and I know that anytime you mess with a marketplace, rent control is the perfect example.
Right.
That you screw things up.
Right. Absolutely. So let's talk about the other article from Canada. Our neighbors to the north.
Our neighbors to the north. So they're trying to ban investors, foreign investors.
Foreign investors.
Okay, make that clear, for 2 years. There's a problem with it.
Oh, lots of problems.
Because a foreign investor just means you're not a citizen. So let's say you're a Canadian citizen, but you live in the U.S. and you run a hedge fund or something. You could say, I'm a Canadian. I'm gonna go open an LLC, and I'm gonna buy a bunch of houses, and I'm gonna I'm gonna get a loan from my hedge fund here, and we're gonna buy 10,000 houses in the Toronto area or Vancouver, Canada, because we like it over there. We think it's a growing rental market. There's ways around this, and
if there's a will, there's a way, guys.
Yeah, so it doesn't really, I think it runs into the same, the same problem. Now Canada's doing this Canada has a national problem. Canada has a lot of problems.
A lot of national problems.
But Canada seems to be taking, and we won't talk about politics because the stuff that happened with the truckers and Trudeau and they took extreme measures to regulate, like basically taking over banks and doing things like that. But with housing, Canada's they're taking huge chops off of the sides of a market to try to create equilibrium, and we all know it doesn't work.
Instead of using a scalpel, they're using this major hammer to get this done, and that's problematic.
Yeah, they're cutting the mole off. Instead of using a scalpel, they're using an axe, and they may take off some flesh, but hey, that's just how it goes. And here's the bottom line: it's not going to work.
Well, so let's follow the money a little bit.
Okay.
Because that's always one of the things that interests me. So individual investors can't, foreign investor can't buy in Canada, fine. But if I have a partner in Canada, I can buy.
Yep.
I can be a builder and go to Canada and build a whole subdivision of rentals.
Yep.
If I am an American, or if I'm from some other country, I can come into Canada and I can buy land and build anything I want. So how does all this help? Because it just seems like it's making it more advantageous for bigger players to come into the market and get an outsized portion of the rental market. So the only people that it seems to really impact are the small investors. So
yeah,
that is kind of an interesting thing to me. So something that was supposedly for the good of Canadian citizens, but that doesn't make a whole lot of sense when there are just so many ways that you can get around this and really not only effectively negate this policy as far as reducing the amount of foreign investment, but what you're doing is you're actually hurting Canadian people who own homes, because now their homes are no longer eligible for these people to purchase or for these entities to purchase. and so they'll just go build their own. And so again, you're limiting that marketplace for Canadian sellers, and it's not helping Canadian buyers.
It also hurts immigration because, foreign individuals a lot of times want to buy a rental house and then at some point move to the country. And they do that here in the US. We had, I don't know if the program's still in effect, but under Obama there was this program where if you owned $100,000 of equity in an investment property in the US, then you got like this expedited visa to come to move here, and it was 100,000. And for years we saw these people coming from Europe, predominantly, who were saying, "Hey, we live in Norway or something, and it's very expensive where we live, and we were buying this investment property for a year, and then once we close on it, we're going to submit all our paperwork, and then as soon as we get our paperwork approved, we're going to move to the U.S., move to Vegas, and then maybe throw the tenant out at some point, or just go find another house. But we want to move, but there's limits to immigration." One thing you could do is create an incentive for people to come, which is something that probably we need. We don't have a super high birth rate in the U.S. It's a low. It's not a negative birth rate. It's not a zero birth rate. It's a low birth rate. We're not necessarily replacing enough people that that are dying. So we need immigration. We need to have people come. A great way to get immigrants. There's two good ways. One is to force them to buy and have ownership in the U.S. because then it's harder for them just to leave. And we know people don't just leave usually. Usually, if they get here, they stay.
Right. So, but the thing about owning real estate in a country is that it gets you invested in that country. Not just monetarily, but it gets you invested as far as being interested in what's happening in that country and participating in that country. So I think that's a good thing.
The other thing too that people don't think about, especially with Canada, as soon as they start messing with who can own properties, it makes you worry about property rights. One of the things that has made our real estate in the U.S. very desirable to people all over the world, we have very strong property rights that are not only codified by law, but they're defended in the courts. And there have been many cases, you've heard of them, where some eminent domain, and they took their house and they built a condo complex there, and people were upset about it. But usually, in any other country, you automatically lose, right? They just take it. It's gone. The government really owns everything. You kind of you own it, but not really. And that's a very strong thing about the U.S. So I'm very hesitant to sort of create more, whether it's federal government regulation like Canada, or it's and remember, a homeowners association usually is like 5 people who just managed to get themselves voted to the board. And then depending on the rules of the HOA, they may not have to get a vote from the owners.
So usually they don't. Usually they just have to have a majority of the board vote on things.
And on some things that they do require that they do it, and some of them I've read are like 80%. Like if you make a major change, and that's already in the HOA rule. And then you have to get 80% of the people to agree to change the occupancy from owner-occupants, or from anybody can buy to only owner-occupants. And then the other problem you have is grandfathering, because there was a subdivision where it was a condo subdivision in Vegas, and we had an investor. He was using an agent at our company, and they came in and they were looking at places, and of course there's some condo complexes with no rentals at all, none. And they found this one, and they looked in the MLS and found rentals, and they said, well, obviously if we buy this, we can rent it out because the MLS is full of rentals. So they buy the place, close on it. The investor, starts advertising for rent and gets a notice. You can't rent in here. And they're like, but these other houses. They go, yeah, but they were purchased prior to 2009. Everyone after 2009, they're grandfathered. If they were a rental, they can stay a rental. But if you weren't a rental in 2009, or you're buying new, you can only be owner-occupant. And he wasn't happy. He just sold the unit. But what was interesting is why the complex was really desirable is the prices were less than neighboring units.
Right.
So think about this. You're an owner in that unit, and investors can't buy in there. So only owner-occupants can, but investors can go buy in all the other units. And what are they doing? They're supporting the higher prices. But when you want to go to sell yours, you're going to get less money because you have a smaller buying pool. So they're not really helping you. And this wasn't super high end. These were like kind of
dumpy.
Kind of dumpy. They were small and they weren't super nice. They were great, perfect entry level condos for people. And then the other, the problem too is what if you get in a subdivision like that where you can't get a loan, and then now you have to buy cash, and now you're like, oh my gosh, now that's another reason why you can't buy in there, because most people just can't drop, $60,000 on an entry level condo. And I don't think we have those anymore in Vegas. This was 10, 12 years ago.
Right.
Yeah.
So look, there are lots of pros and cons. Clearly, we are on the side of property rights. We're on the side of letting the market take care of itself, and letting people choose what they are going to do with their property. Do we want a party house next door to us? No. Does anybody want that? No. But the argument that we're making is that the problematic properties are few and far between, and whether they are a short-term rental, a long-term rental, or an owner-occupant, you can still have a bad neighbor. And we certainly know about that firsthand. So just keep that in mind. It is really important that people are able to do as they see best with their properties. Clearly we don't want people infringing on other people's properties and disturbing them and that sort of thing, and we understand that, and we're with you on that. But at the same time, we just believe that the market is better at figuring this out than government or homeowners associations.
I have lived in many houses all over the U.S. As some of you know, I spent 14 years in the military. I was a pilot in the U.S. Marine Corps, and so I've lived in probably 13 states. Okay. And in most of those states, I lived in off-base housing. I wasn't able to get housing because I was there for a short time. So I'd rent out in town for 6 months, whatever. Of all the places I've ever lived, the two most expensive houses, the nicest houses, the houses you would want to live in, because it's a beautiful neighborhood, it's very peaceful, and the neighbors are more affluent, and for the most part, the neighbors are very affluent and everything. The worst neighbors I've ever had, the two worst neighbors I've ever had in two different houses were the two most expensive houses, and they were owner-occupants.
Yes. And
they're never going to leave, right? And they're just, whether it was they threw parties like every Saturday night in their backyard until 2 a.m. because they had a big backyard with a pool, and they were having massive parties, or some other crazy business that they run out of their backyard, youth camp or something like that. So I'm just saying that, this myth, it's a stigma of saying when you refer to those people as renters, there's a lot of people, for whatever reason, don't want to rent. They cannot rent. They're not in town long enough to rent. They just have an aversion to getting a mortgage, or they don't want to do it. And they're not any worse. They don't trash a property, because remember, if they trash a property, one thing can happen is they lose their security deposit, they can get thrown out. A lot of leases have restrictions that say you have to, you can't do this. And that's actually something that most homeowners don't have.
Right.
Like if you can make as much noise as you want, and you can't throw yourself out, but the landlord can say you're a nuisance. And all of the leases that we use, we have a nuisance clause that says if you become a nuisance, we can go get you evicted.
Right.
And that's actually you actually have to be on better footing as a tenant. You can't throw wild parties.
Right.
You'll get thrown out. So my take is, I like free markets. I like markets that are efficient. And anytime government or a governing body steps in, they get worse. Unintended consequences happen. And I don't like I don't like what Canada's doing. And even though I'm not a Canadian, I don't really care about Canada. And I don't like what HOAs are potentially doing, because they're just cutting out a potential class of people from buying.
Right. And we're not saying that the U.S. is a bed of roses either. We have more than enough of our own problems, so we're not just picking on Canada. We do know we have more than enough of our own problems, but we're just discussing right now the real estate things that are happening as far as limiting property rights.
Okay. If you liked the video, please share it with your friends, subscribe, hit the notification bell. Leave us a comment. This is a good debate video for telling a story. I know that we have a lot of people who watch and never comment, but so what's your experience with dealing with living next to a renter, or living as a renter with a homeowner next to you who was the homeowner and was a complete jerk, right? What do you think? You think it makes sense? Do you think it's really going to help? Like, do you think an HOA limiting investors is going to make it all of a sudden you can magically now buy a house? Like, is it too much competition or what?
Right. And if you have good experiences with having a tenant next door, tell us about those too. I'm going to share with you one good experience. I had a tenant once, and he was amazing. He would vacuum the carpet in a different direction multiple times a week because he felt that was better for the carpet. He would mow the lawn in a different direction every time, because he felt that was better for the lawn. And he was so meticulous about the lawn that I drove by one time to check on the property, and I'm not making this up. He was outside with a pair of scissors, scissors like kitchen scissors, and he was making sure that anything the lawnmower may have missed a little bit, he was making the lawn completely even. Now, I have never seen a homeowner do that, but I have seen my tenant do that. So that's my tenant story for you. So share your tenant story with us.
He's a serial killer.
He's not a serial killer.
Yeah, he is. That's those three things. If you look up serial killer in the dictionary, those three things are three of the primary. They become a serial. That's how they become a serial killer. That's the pathway that they have to take.
And he paid rent early.
Yeah, totally. That was the fourth one. That's the last one. So, and he doesn't live there anymore, right?
I don't know. I sold the house.
You sold the house.
Yes.
Okay. Thanks for watching, and we'll see you on the next video. Bye.
Bye.